Hey, Renter Retires, it's Adam Schroeder here with another episode, joined as usual by Zach Lemaster, the founder and CEO of Renter Retirement. And we are pleased today to be joined by Shawn Moore. He is the CEO of Vodyssey. We're going to talk about what can make you and save you a whole lot of money potentially, and that is short-term rentals. So Shawn, thanks for coming back and joining us again.
Absolutely, guys. Excited to be back again.
Yeah, just remind everybody, if they haven't listened to our previous episodes with you, kind of how did you get started in real estate? And since you're in this space now, what led you to the short-term space and why'd you stick around there?
Yeah, awesome. Yeah, I've been full-time real estate investing for 24 years now. I can't believe it's been actually that long. I gave up the W-2 job back in 2000 and started investing in real estate. It bounced around a lot of different asset classes. You'll never hear me talk bad about real estate. I love real estate in general. I think single family real estate investing is typically the best and fastest and safest route for most just average everyday Americans. And I fell in love with being able to, create a lifestyle for myself, my family, and realizing, I actually got into the short-term rental game kind of by accident and been doing it for a long time. Got it by accident back in 2006. Bought a vacation home, not as a vacation rental. And as the economy was changing and we were going through that last shift, I kind of out of necessity had to rent it out and started to realize how this was before Airbnb and Vrbo and everything else was around. And so we would use Craigslist and local classifieds and we'd put it on there and we'd rent it out for the weekend. It was a mountain, like a cabin up in a lake town in Utah. And it was just kind of a backyard resort community of Salt Lake. And people were using it on the weekends. And I started realizing, holy crap, I'm not only paying my mortgage, but making more than my mortgage. And I started watching this happen through one of the worst real estate slides we've really ever seen from 2008 to 10. And kind of coming out on the heels of that, I started realizing, man, this was a really highly producing asset for me during that time compared to a lot of the other things that we had in the works in the real estate game. And started to, just start peeling back more layers of the onion, got more interested in it. And, the rest is history. Watched this asset class grow up, watched it really become popular and really become mainstream. And it's been really fun. But we fell in love with it back then because of how it performed during a really contractionary period of real estate. And then we started to see, we started getting into it. And as things were starting to grow back again, we started to say, hey, this is a really capable asset for us. And what it really allowed us to do, you guys, was buy quality assets in quality areas that typically wouldn't produce as a long-term rental. They weren't going to, we just weren't going to cash flow them, right? We were buying nice properties, nice areas, and it was the only way for us to cash flow them. And then we started to realize, well, it's pretty fun to buy beach homes, mountain homes, all these places that we could go use. And we just, that's kind of how we got involved in the real estate or the short-term rental game and really stopped doing all of our fix and flips, all of our development deals. I got rid of my long-term rentals. And so, not that any of them were bad. We just got really focused in and interested in short-term rentals back then.
So you mentioned kind of getting started doing like the Craigslist and that kind of stuff before that. Is that still a viable avenue for people to actually get quality clients, or is that kind of died off now that there's all the other ones?
It's definitely slowed for sure. We still get a lot of direct bookings. We typically get them from paid ads on Facebook, Instagram, that kind of stuff. So we have a really robust paid advertising program for our properties. In fact, our paid ads program across our Vodyssey portfolio, which is almost 2,000 properties at this stage, averages an 8-to-1 return on ad spend. So anybody that's ever advertised for direct bookings realizes that's pretty good. For every dollar we put in, we're getting $8 back out. And so it's a faster way to accelerate our direct bookings is going the paid ads route, and we're able to capitalize on that. So we don't typically go to the free ads, the Craigslist, some of those marketplaces anymore. I would say that they're absolutely still viable. It's just we try to accelerate with some of the paid advertising.
Want to make your money work for you without any hassles? Short Notes by Connect Invest lets you invest in real estate with just $500, with terms as short as 6 months and annualized interest returns of 7.5% to 9%. Your investment supports a diverse portfolio of active U.S. real estate projects. No property management required. With interest rates trending down, now's a great time to jump in. Ready to put your money to work? Visit connectinvest.com/RTR to get started today.
Yeah, that's interesting, Sean. I think a lot of people, when they look at doing a short-term rental, their mind immediately goes to, I'll just throw it up on Airbnb and Verbo and, see how it performs. And, you do get a lot of traffic from that, of course, because that's specifically people looking for vacation rentals. But that's an interesting point about, if you build a portfolio where you can bring your own traffic in, repeat guests, have your own website dedicated to rentals. I think that's a really way to approach it like a business. But I look at short-term rentals as, as we've been colleagues for a while, we've discussed some of like our short-term rentals, and I love short-term rentals as an asset class. It's a small portion of my portfolio, but it is I will say, the funnest portion. So we refer to it as fun real estate. And I get really excited especially when we talk about, some of the tax benefits and things where, and we've gotten into this in extreme depth on other episodes, but essentially, you can take a short-term rental, and if you're not a real estate professional where you're getting those 750 hours, or you and your spouse, or you being single, like you just can't qualify as a real estate professional, you're full-time employed, like you could actually self-manage a short-term rental and still get the accelerated depreciation and tax benefits and things like that, which are, just awesome and extremely impactful in building wealth. But just kind of to review, what do you think if we had to compare and contrast a long-term rental versus a short-term rental? Because I think a lot of our investors own long-term rentals, or they're just getting started, but they also have an interest of like, maybe it's time to diversify or scale into some of these other asset classes. What do you think some of the like key points of the benefits to short-term rentals, like pros and cons for someone who's traditionally in the long-term rental mindset?
Yeah. So I'll start with really the con, right? The biggest con from short-term rentals versus long-term rentals is it's harder to compete, and it's harder to do really well with short-term rentals. Frankly, there's a lot more levers that you have to pull. There's more things you have to do with creating these unique experiences, furnishing them with, you have to have, you can't just go put, you can't go to the yard sale and furnish these properties, right? You're really putting a lot of really nice things into them. So they're a little bit more expensive on the front end just to get them set up. And then you're manage them, right? You don't have somebody that you're putting in there that's going to be a long-term tenant for a year or more. These are people that are coming in, you might have 2 or 3 people in and out of that property every single week. So you've got to be set up either yourself to manage these properties, or you've got to hire good management partners. And so there's a lot more moving parts with a short-term rental than a long-term rental. A long-term rental can be a lot more turnkey. And there's a lot of busy professionals that are like, I don't know that I've got the time to jump into the short-term rental world, right? And so some of the things I love about them, we kind of talked about before. One, they're fun. Like they are fun to own. It is fun to have a portfolio of properties across the country that are in really nice areas that you can go use. And that was, for me, originally when I was younger, it kept my attention span. Like when you're investing for something for the long term, right? It's a short term rental, but it's a long term investment, and you have to be interested in it for the long term, right? And I would lose interest, frankly, in my 20s. I had 52 single family home long term rentals, and I just wasn't that interested in them, right? I wasn't it was like I had this, I had ADD where I was like, well, they weren't that fun, but they were great assets. Looking back, I'm like, why did I ever sell those, right? They were producing. I wasn't getting rich on them right out of the gate, but I would have been really wealthy with them after a certain period of time. Somebody else was paying for a pretty decent portfolio. And short-term rentals kept me interested. So it kept me in the game when I was early on. Now I'm, I feel like a little bit older. I've got a little bit more staying power and maybe keep my interest a little bit more, but they were a fun asset class to own. The other thing that I really like about short-term rentals, and I kind of touched on it before, is it allows me to go buy quality assets in quality areas and still cash flow them. And what I mean by that is, and you guys know this being in real estate, right? And people listening, you've heard the saying location, 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 right? And that's like the 3 keys of real estate, right? And it's not, there's a lot more that goes into that, but there's something to be said about being able to buy in really quality areas and quality assets that are paid for by other people, because real estate doesn't appreciate across the board the same across the board in every area. And typically those quality areas appreciate at a higher clip, and long term, in a 5 or 10 year time horizon, that's going to be the biggest wealth builder versus any cash flow you produce along the way. And so that's one of the things that I love about short-term rentals as well, is it allows me to go buy quality assets in areas that do very well historically appreciation wise. And that's a lever that down the line is a big lever when it comes to your wealth building journey.
90% of real estate investors miss key tax savings by overlooking deductions. Flipping houses, managing rentals, or growing your real estate empire? Make sure you've got experts in your corner, especially when it comes to taxes. That's why we turned to Nevada Corporate Headquarters, the experts who help us reduce taxes and set up our real estate LLCs. With 35 plus years of experience and 17,000 five-star reviews, Nevada Corporate Headquarters helps you manage properties across states, navigate tax laws, and protect your assets, all with a real estate LLC. Visit nchinc.com/RTR to schedule a free real estate LLC formation and tax consultation. Plus, receive a free guide to safeguarding your assets.
How does someone get started in investing in short-term rentals if they don't have any other experience? Because I think the common path, and I know that you see this a lot, and you help coach people on how to do it the right way, but I mean, there's a lot of people that are like, oh, this seems like an interesting area. Maybe they check out AirDNA on some stats, Airbnb, Vrbo, like they just do a little poking around, buy property, throw it up on Airbnb, hope for the best. How does someone really set themselves up for success as a first-time short-term rental investor? And what are some key things that kind of they can do to separate themselves out from the run-of-the-mill?
Yeah, and it's a great question because we just came off of a season that just having a short-term rental was like having toilet paper during COVID, right? Everybody with a short-term rental looked like a genius. They were all making money because that supply and demand gap was so large after COVID. And it's really when short-term rentals became, mainstream, widely known from both the user, but also investors jumping into the game trying to ride that wave. And just like anything else, the best way to get started is to try to figure out and find a path that you can say, okay, somebody's been down this path. They're where I want to go. I'm not a huge believer in trying to figure all this stuff out by ourselves anymore. There's nothing new under the sun. There's somebody that's been down the road before us that's a few steps ahead of you, and try to find somebody that's actually doing what you're doing, right? I feel like that because there's so many moving parts, it's one of those asset classes that is easy to get into. The veil of entry for single family homes is easy to purchase, right? We've got the best financing options. We've got the best, the inventory's out there. Most people are familiar with single family homes and they feel like short-term rentals are single family homes. And so we feel like, well, because that veil of entry is fairly thin when it comes to real estate investments, then I should just go buy one and, like you said, put it up on Airbnb and see what happens. There's so many more moving parts that we're not in the property business. People don't realize that we're in the experience business. You're in the hospitality business. You've got to create great experiences for very specific target audiences. You've got to have a system to deliver those experiences. You've got to understand marketing to stand out in a crowd because you've got to attract a new person coming in multiple times a week. It's not like you just have to throw this property up and hope that somebody comes in once a year or signs a long-term lease. It's not in the game you're playing. So there's so many different aspects of being successful in short-term rentals is trying to figure out somebody that has actually been down the road, right? And I kind of have this thing that I call the slaughter of the short-term rental lambs the last couple of years, because there's a lot of people that have jumped into this game or been led into this game by people that really haven't been in the game very long. Like there's a lot of people that were, they've never experienced a market shift. They don't really understand, how, investments work and all those levers. And it can be really, I don't want to make it sound like it's super intimidating, because there's a lot of really good people that succeed at a really high level in this game, but try to find somebody that's actually been in the game, that owns properties, that has had success. They know those levers to pull, and then get some help there. It's just so much cheaper, and you can accelerate your time frame when you can follow in somebody else's footsteps. I know you guys, with what you guys do at Rent to Retirement, you help long-term investors get into a game and you help them mitigate those risks along the way, right? And you're like, hey, listen, we've been doing this for a long time. We know how to look at certain things different than you're going to look at it as a brand new person. But it's not rocket science. Like everything we do, it's not hard and it's complicated. It's just there's a lot of moving parts that you probably don't know what you don't know in the very beginning. That's why I say that.
Our Rent to Retirement community loves our friends at Tardis Wealth Strategies. They help investors like you secure down payments for new properties with ease and keep growing your portfolio, even when traditional funds are tapped out. With Tardis, you can realize up to 90% discounts on every investment. helping you grow your wealth more efficiently to create a passive income snowball that changes your life. Don't let funding limits hold you back. Visit renttoretirement.com/TARDIS Wealth to learn how you can unlock the door to true financial freedom. Ready to get started? Check the link in the show notes to connect with TARDIS Wealth Strategies today. As you're, getting into the game, you say you don't know what you don't know. A lot of people, when they look at long-term rentals, they know in general your vacancy rate, what to expect with maintenance. Everybody, your management's 8 to 10%. Whenever you're looking at properties just on the whole, what are the quick and dirty assumptions that you make so that you can quickly vet a property and see if it's worth it?
Yeah, what I'm looking at, what I do is I vet a market. I look at the market revenue and the revenue potential in a market. And then I look at a ratio between, like if I'm looking at, let's say we're picking out a market in Florida, I'm going to pull the market revenue numbers, and there's going to be a range. It's not like, okay, 4 bedrooms, the market rent for a 4-bedroom, like it would be on a long-term rental in an area, is going to be within a couple $100 in a certain zip code. Most of the 4 bedrooms are going to have a certain market rent, right? Short-term rentals, you're going to have a range of maybe annual rents from, let's say, $40,000 up to $70,000 or $80,000. So that's already starting to be confusing. It's like, okay, where do I fit in that range, right? And so, but for a 10-minute quick underwriting, I look at what that range is. And then what I do is I look and say, okay, how much does a 4-bedroom property cost me in that market? And let's say I can buy a 4-bedroom property in that market for $500,000. And based on that revenue range from 40 to 90, what I want to do is I want to see 10% of the acquisition somewhere about in the middle of the market as far as the revenue potential for annually. And that will tell me there's some upside, there's some downside, but I can go buy a $500,000 property. And the reason I do 10%, you guys, is because 10% of the acquisition cost of gross revenue is about your break-even mark. That's where about you break even when you add in all your management costs, your debt service, and everything else. All those different costs that are involved, you need to make about 10% of your acquisition. So a $500,000 property, my break even for that year is going to be gross revenue of about $50,000. And so I want to see that $50,000 on that revenue line somewhere in the middle of that market. And then I can dive into it and say, yes, this is going to have more potential for me. How can I, capture my unfair share of that business based on proximity, based on the experience, based on all those other things that we're talking about. But just like quick and dirty, what I'm going to do, Adam, is just say, okay, how much does that cost me in that market, and what's my revenue potential? If it's, let's say in that example, $40,000 to $90,000 is kind of the revenue range for four bedrooms in that market. And let's say I was going to pay $800,000 for a 4-bedroom. Now all of a sudden I have to operate at the very top of that market, even to break even. And so it's telling me, okay, that's my revenue range, and I'm already at the top end of that. I'm not super excited about that market because there's not a lot of upside for me, right? I'm hoping to break even at the very top of the market. Does that make sense?
Yeah, those are good back of the napkin math numbers. Yeah. And I think what I found too, Shawn, is that it's market dependent too, right? There's a lot of is it seasonal? Do you have are you looking at, so when you're looking at that gross revenue, I would assume that's assuming it's
year. It's taking all that into account for sure.
Where do you find that number? Is it AirDNA, or where do you find your?
Yeah. So what we do is we use AirDNA, and what we do though is we have their enterprise accounts, right? There's a lot of really good front end data on AirDNA. There's a lot of really, really good back end data, and we actually extract all that data, and it comes from the seasonal occupancy, and we're pulling data for the previous 5 years. So we're looking at a lot of data, and we're extracting all of the occupancy month by month for the last 5 years. We're pulling all of the nightly rates based on different price tiers. In AirDNA, they break it into 5 different price tiers. And so we pull all that data on different price tiers. And then we pull the total revenue, total dollars spent in that market, for the 4 bedrooms in that market for the last 5 years. And then what we do is we just have basically fancy spreadsheets, right? Google Sheets that we dump all that in. It kind of paints that picture for us. And so there's not a spot on the front end of AirDNA that will paint that picture for you the way that we look at it. But all that data is there. We just kind of data dump it into our spreadsheet so we can paint the picture for us to look at that really quickly.
It's a new year, folks, so it's time to refresh your rental strategy. Kick off 2025 landlording like a pro with AVAIL. Start the year strong by finding great renters fast without the hassle. That's right. Create your listing just once at avail.co and then watch as it gets syndicated to 20 top rental websites. You can also receive and review applications online, streamlining the entire process. Ready to screen prospective tenants? Easy peasy. You can access TransUnion credit reports, tenant background checks, and eviction history, all at your fingertips. Need a lease? Avail has lawyer-reviewed templates specific to your state that you can get signed online. And let's not forget about collecting rent. Accept payments online using your tenant's preferred method, making it easier for everyone to stay on track with rent. Ready to make 2025 your best rental year yet? Visit avail.co/rent to retirement. That's avail.co/rent to retirement and unlock the full potential of your rental properties.
So that'd be a good checkpoint just to kind of see general revenue numbers and things like that. And yeah, you've helped us evaluate some of our new construction properties in different parts of the country that we were just curious of, like, hey, how would these potentially perform as short-term rentals? And yeah, you overloaded us with a ton of data that's very, very in depth, but it's also surprising of like markets that you wouldn't think about or areas. It's like, hey, this has extreme short-term rental potential.
Yeah.
And to your previous point, some of the markets that do not make sense as long-term rentals or not as attractive as other areas long-term rental could be an excellent short-term rental market. So yeah, very, very fascinating stuff. And I think it's interesting to find the data. Let's talk a little bit about just state of the union of short-term rentals. You had mentioned, like, and I think people that are generally familiar with the space understand that a lot of people got jumped in during COVID because there was a lot of people working from home, traveling around because they weren't traveling internationally. Like it was kind of a boom time. And then you maybe saw there's some stuff on social media or the news or whatever about, like a Airbnb bust and things like this. And, I think a lot of that was attributed to, like you said, people not having like baseline underwriting. But I'm more curious, like, what do you see how the short-term rental market is operating currently? And what does the future look like just for someone who's maybe considering getting in the game now?
Yeah. And so the short-term rental market has been absolutely crushing it. Every single time the data comes out on the money being spent by the consumers, right? And I'm talking about how much money is being spent on short-term rentals by the consumer. It continues to go up every single year, year over year. And just looking back, and even though we're reading these articles of, the Airbnb bust and the short-term rental game is over, the golden age is done. And now that's referring to something else in just a minute I'll talk to you about. But the actual market itself just continues to grow. Short-term rentals have become kind of the shining star of the hospitality game. They're not going to ever overtake hotels. There's a space for both. They serve completely two different purposes. And so the money, though, that the consumer is willing to spend on short-term rentals continues to go up. It continues to skyrocket. In fact, multiple reports are anticipating for an 11% increase year over year for the next 10 years. And so right now, the short-term rental market is about $124 billion market. In the U.S., we account for about $87 billion of that worldwide, or in the U.S. of the worldwide market. So a large percentage of that. By the year 2034, they're anticipating a $312 billion market. So to think it's going anywhere is foolish, right? It's not. It's a mainstream asset at this stage. It's a main accommodation choice for a lot of consumers. Now, there was a lot of people who jumped in and supply skyrocketed from the investor side of things, right? And so you have a lot of markets that you have a lot of properties for the consumer to choose from. Even though there's more money being spent in the market, the RevPAR, which is everybody's fair share of business, has gone down significantly because, their slice of the pie across the board has gone down. So just like any other mainstream business or asset, what we're finding now is if you're not going to operate in the top 10 or 20% of those markets, there's not a lot of money to be made. The middle of the markets, the bottom of the markets don't make any money. And that's very similar to pretty much any industry you go to, any business you go to. The top of the market in the short-term rental game now, it's not everybody getting their fair share of business is paying the bills. Their fair share of business doesn't pay the bills. So you have to get your unfair share of business, just like any other competitive market, and operate at the top of the market. If you're willing to understand what it takes to operate at the top of the market, there's a lot of money to be made. But if not, there's also a lot of money to be lost because you're not paying your bills. And that's where you hear of a lot of people that are really frustrated with it. Right now, as an investor, I'm actually really excited. Not that people are struggling, but there's a lot of really quality properties, quality assets in really good areas, furnished beautifully, that are struggling right now. And owners that are like, hey, listen, I'm out of this game. I'm not doing it. And we can go pick up these homes, make minor changes to them, understand how to create these good experiences and market these properties. And all of a sudden they go for a middle of the market losing money, top of the market making money. And that's where the game is at right now, is really understanding how to operate at the top, just like, because it's not going anywhere now. It's mainstream. The supply is always going to be there, because even as people jump out of it, other people are going to keep jumping in because there's money being spent there. And so, just like every realtor doesn't make the same amount of money, every carpet layer doesn't make the same amount of money. Everybody doesn't just get their fair share of business. I think that everybody kind of got used to that in short-term rentals for whatever reason, that everybody was making money, and when some people stop making money, they think the game is over. And I couldn't agree or disagree more with that. Is the game is just beginning, I believe, because of the money being spent, but you have to play it to operate at the top of the market.
Looking for an edge in real estate? For over 30 years, RealSource Residential has pioneered research on real estate cycles and market timing. They don't just follow trends, they identify them with analytics to pinpoint high-growth markets. RealSource Residential offers access to invest in prime multifamily opportunities where underperforming properties are transformed to unlock value and maximize passive income. Visit www.realsourceresidential.com/RTR to subscribe for real estate insights, market reports, exclusive opportunities, and tools to grow your wealth with confidence. RealSource Residential, where experience meets innovation and investors come first. Yeah, you in our previous episodes that we've done with you, you've talked a lot about that experience, and that kind of really that driving you up to the top of the market.
Yeah.
One of the big benefits of short-term rentals that we've talked on here a lot is kind of the self-management, getting the cost seg and the accelerated depreciation. If you're trying to do that the first year and trying to create that experience, do you have any tips for people on how to do it if they're not living in that local market? Like, what are some of the tips and tricks that you can give so that people can provide that experience, get the tax benefits, but not live next door to their property?
Yeah, the biggest thing is be part of the target audience, right? And experience is just saying, okay, how are we going to raise the bar and not be this vanilla, like kind of mainstream model home type of a property? That's what's out there. Everybody has model homes. They're designed beautifully. It used to not be. A model home used to stand out in the crowd. Now it doesn't. And so I always say, think about how you can tell a story with a property, and whether that story is the history of the property, whether it's the history of the area, whether it's something that you enjoy to do. Let's say you're adventure travelers and we want to make this property, I think on the last episode, I talked about a fly fishing property. We made it all about fly fishing, right? And so we have properties there for adults to come in and relax. We have people that do these spa-like experiences. And so think about, okay, what do I really love about this area? There's people that have, there's areas that are in really historic areas, or the property itself has a historic story, and you tell that story with the property. You don't have to be there. You don't have to live there, right? The experience is being able to bring that story to life. We do it a lot through custom artwork. We have a lot of customized artwork with different murals, different artwork that really brings and immerses that person. Stuff you would never do in your own home, but really the whole time you're in these homes, you're like, it's telling an entire story, right? And so that's how we bring those stories to life. And sometimes, like I said, it can be, we got some properties that literally the whole story is a scavenger hunt around a little character, right, in the property. And so it can be, the sky's the limit to how you do it. But it's mostly, how am I going to articulate this story, create this experience, like you said, without me being there, right? There's a lot of, there's ways you can elevate an experience by bringing in a private chef and masseuse and all these different things. That's not necessarily what I'm talking about. I need to bring in an experience that lasts all the time, whether that chef's there or not, right? And so we do that a lot with the accessories and the artwork that we provide. And then obviously different amenities that are congruent with that story, depending on what those are. But the amenities aren't what makes the difference. A lot of times it's how we tell that story.
That's huge. So I love the creativity aspect, right? Because you can, and that becomes fun too, I think, is putting your creative genius to work on that particular property, to make it stand out, even if it is that cookie cutter type of house in the price range and things like that. That's going to allow you to capture that top 20%. And you reviewed a positive outlook for the short-term rental market in general. I agree as well, Shawn, but it all comes down to running the numbers and understanding, how to operate your business. I have two other general questions before we want to dive into like Vodyssey and like how you help people. But the first one is on regulations, and that's just a common question that always comes up. What do people need to be conscious about with regulations? And the second question, which I'll ask you again if we forget, but is just about someone that wants to self-manage, like just getting started. What are the essential team members do you need? What essential things do you need? Do you like any tools and resources you recommend with like synergies with booking sites that integrate with others? Cleaning and maintenance crews. Like how do you? So let's talk about the regulations real quick, though. A simple, quick answer on regulations. What do you think?
Regulations, one is it, because this is a mainstream asset, it's the very first stage of underwriting, right? And it's just at this stage in the game, you guys, we just don't take any chances. We either can operate or we can't. And we go in areas and we invest in areas that we can get licensing and permitting to operate as a short-term rental. More and more and more. We've gone through 2022 is kind of the year of sweeping regulations in the short-term rental world. And sometimes the pendulum swing really far. Last year, things are kind of settling back in. Now, when you go buy a short-term rental, the very first part of underwriting is finding out from those counties and the cities and the HOAs that you're operating in, what it takes and can you operate a short-term rental? What are the rules, regulations, and can you get a permit? If we can't, we just don't buy in those areas. And, it's just not, it's not worth it to take the risk when you buy a property unless you have some sort of plan B. Most of the time we don't have a plan B. And so we just don't buy, right? And so, but it should be the very first thing you do before you even consider underwriting deals is, okay, here's the market I'm underwriting. I looked at that quick ratio. I'm 10% somewhere that makes sense. There's some investment potential here. The next question is, can I operate a short-term rental? Just like I can't go build a multifamily anywhere I want. I can't go put a 7-Eleven on any corner that I want. You can't operate a short-term rental anywhere you want anymore. So you have to find out where you can.
You guys like areas that have established regulation is what you're saying, right?
Yes.
I recently had an issue with a property that I've operated as a short-term rental for like 4 years, and you have to apply for a short-term rental license every single year. And it has to go through an approval process. And to me, that's the biggest risk of like,
yes,
I want to make sure I get that license every year because I'm
it's hard, right? That's a risk, right? A huge risk in those areas. And so that would be an area that I wouldn't be super interested in because I'm like, okay, what if I don't get that? What if I don't get that permit? And now that's just me being super conservative, right? Like I'm like, okay, I just want to make sure I can get it. I can tag it to the property and we can move on and buy more properties.
Now, is that something you can get that before you close on the property, or do you have to say, I'm very likely to get it, now I need to close on the property? And
it's a great question. Some markets, they don't allow you to even apply until you own the property. And so again, there's a level of risk, and everybody, like we're trying to mitigate our risk along the way. And so sometimes you say, okay, what is the likelihood of me getting this after I buy this property? And what's the likelihood? Is there a waiting list or whatever there is? Sometimes, Adam, we will go buy properties that we're waiting for that. We can't even apply until we own the property, but we know and we've researched that the likelihood of us getting is pretty good. It's stacked in our favor. You're never going to, you guys know as investors, we're never going to ever mitigate every risk out there, right? We're going to try to mitigate as many as possible, stack the odds in our favor as much as possible so that we can start moving forward.
Yeah. And HOA is another, and that's a perfect point on the risk mitigation. The more you research you can do, the more you understand, then you have a plan, you have a contingency plan. HOA is another one. We have an HOA where in some of these areas, and I think it's better to avoid HOAs if you can, because they could allow short-term rentals, but guess what? The board could change, they could revote, all of a sudden they don't allow it, right? And then what do you do? Even if the city allows it, the HOA could not allow it. So anyways, things to be conscious about. Shawn, just real quick, what are like the key operational components?
Yeah.
If you're not going to have someone manage property for you, if you're going to self-manage, that you need?
The two key pieces, and the number one key is your cleaning crew, right? If you're number one, you've got to have really good boots on the ground people in the area. Your cleaners are going to be they're an extension of that entire experience, right? It is such a critical component of self-management, and then your maintenance crew, right? And so your boots on the ground, cleaners and maintenance. Then everything else is a distant second to those two groups, right? When you're self-managing your property, because there's a lot of property management software tools out there. A lot of them are very, very capable. I always tell people, just pick the one that has the user face that you're most, that is most intuitive to you, so that you'll use it, right? Because most of them have really good communication with the guests, and that's where you're going to come in, is with the communication, the check-ins, the check-outs, and coordinating all this stuff. But the person who is really doing the heavy lifting on the ground is going to be the cleaners and the maintenance crew. And so before when you dive into self-management, that's where you're going to focus almost all your time and effort. And then you're going to put, there's some great software tools out there. There's some great communication tools out there. And there's a lot of really good ones, right? And so, and even communicating with the cleaners and the maintenance crew, and so that they know what's going on. And so that's installed secondary. You want to go in, and I take, if you're going to self-manage, I would take a lot of time finding that right crew. And usually you need to have some backup when it comes to cleaners. Not as much on the maintenance, but you got to have some backup, because what happens if you have a great cleaner and that person is sick, or they decide that they're overwhelmed, or something, they go on vacation. Like, you've got to have layers of backup when it comes to the cleaning crews in there.
Yeah, and I know that well said. There are some, like, even sites, if you're looking at a new market, like, where do I find a cleaning crew? There's actually some national sites that have, like, it's hiring sites specifically for short-term rental cleaners, and they have, like, reviews and how many properties they served, and so you can find reputable cleaners, like, through those sites, and we could share some of those in the show notes. I've seen those, and often the cleaners have an associated maintenance crew with them, so it's not that difficult to find quality cleaners out there. It's just knowing where to find them. Shawn, tell us what Vodyssey is all about, how you've been helping people for a long time get started in the game, and we'll throw up the link where people can go, because I think you're giving away a free book to our community as well.
Yeah, Vodyssey's just, we started helping people dive into the short-term rental game, owners, investors that are interested in building a portfolio of short-term rentals and being able to operate at the top of the markets, get their unfair share of business, and walk into it with their eyes wide open, really just mitigate those risks along the way, so we can stack quality assets in our portfolio for the long term. And so at Vodyssey, we help people through that whole process. And the best place is just, we've got vodyssey.com/RTR. And then what we're going to do, I've got a book called What the Hell is Lifestyle Asset? And it really takes you through our entire 9-step process that takes you through acquisition, setup and management, and marketing a successful vacation rental portfolio. And it's a great place for somebody to start. It's absolutely free, especially for your guys' listeners. We're putting it out there for you. And I think it's a good place to, walk into, at least see what my view of this world is. And like I said, I've been doing it since 2006. So I've seen a lot of different things happen along the way. And our goal at Vodyssey is to help people really, keep raising the bar, keep leveling up in the short-term rental game. It's been great for the industry. The more investors we have, the more operators we have that continue to raise the bar, the better it is for the industry. And that's what we're all about.
Yeah, fantastic. Well, Shawn, thank you so much for joining us today. I really appreciate your time. Everybody, check out, like you said, vodyssey.com/RTR. It'll be in the show notes. It's up on the screen now. You can just go there and get that book and start learning about how to manage your short-term rentals. Like Zach talks about all the time, there's a lot of tax benefits that can come along with it. So it's definitely something that's worth checking out. If you want to check out some properties, you can head on over to renttoretirement.com. That's renttoretirement.com. and see what we have available there. And as always, if you have any questions, it can be something you want us to pass along to Shawn, or just a question you want Zach and myself to answer. Email them to podcasts@renttoretirement.com. That's podcasts@renttoretirement.com. Really appreciate the time you spent educating yourselves today. We'll talk to you on the next episode.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.